And so that was when AJ and I started like a working group, bringing on one hand government entities and on the other hand private sector companies together to start looking at how New Zealand could actually tackle this digitalization of trade, both as the lack of it is a challenge, but actually that thing in itself is an opportunity to really unlock the New Zealand economy.
The New Zealand Tech Podcast, brought to you by Gorilla Technology, proactive and strategic IT.
Hey folks, greetings and welcome along to the New Zealand Tech Podcast. I'm your host, Paul Spain, and today we have two great guests with us, AJ Smith and Mitchell Pham. So great to have you both here. AJ, maybe we can start with you, a little intro of where you fit into this big wide world of tech in New Zealand.
Yeah, thank you. Thank you much for hosting us today. Yeah, I've been in New Zealand now for about 8 years, originally from South Africa. Came over to New Zealand, entirely sure what I'll be doing here, but loved the country and loved the people and loved the environment, and came for a much more relaxed life. Well, that didn't turn out well, but I'm enjoying every day doing tech, and yeah.
Great. Well, we're really looking forward to sort of, delving in and learning, about your company, TradeWindow. Mitchell, you've been, very deeply involved in the tech sector in New Zealand for a long time. What are sort of the highlights of the things that you're focused on at the moment? Obviously, TradeWindow is, one of the entities you're involved with.
Absolutely. Hi, Paul. Good afternoon. Hi, everyone. So look, maybe about 3 years ago, I stepped back from the daily running of the Code HQ group. Very, very fortunate to have a really strong leadership team that continues to kind of lead the business so that I can actually step back, still stay involved, but step back and start to, what I wanted to do was to take my experience and maybe share that and apply that in different contexts, helping different businesses to unlock their potential for growth. And each organization is kind of different. Particularly at TradeWindow for the last maybe just over a year or so, I've been mainly helped with finding ways to kind of unlock some things and maybe make some adaptations in the business to ensure that it remains agile. It started out as a startup, so it was very agile. But then once you've listed, there's a whole lot of things there that over time kind of can come in and kind of, make you less agile than otherwise. And so really my main focus has been looking at different parts of the business and say, well, how can we retain that agile culture, and how can the business, when the time comes, when it seizes opportunities, that it can scale up really rapidly, in New Zealand and offshore. So that's kind of what I really enjoy doing at TradeWindow.
Yeah, great. Well, also a big thank you to our show partners, to 1NZ, 2 Degrees, Spark, HP, and Gorilla Technology. So TradeWindow, very, very keen to hear the story, AJ, around, TradeWindow. You came from South Africa to New Zealand, and next thing you know, you've got a tech startup that's listed on the New Zealand Stock Exchange. Tell us how that came about, and what was your past experience that set you up to jump into launching TradeWindow?
Yeah, like I mentioned, I've always been in fintech, and I've always had a keen following on technology and innovation. With my fintech businesses, the one thing that really struck me in my early stage, I had a great technical solution for personal loans and for other parts of the financial and lending industry. But there was one shortcoming to that, and that was in the early days, digital identity. We could potentially manage everything and de-risk ourselves, but fraud through digital identities, identity theft, was always the shortcoming. And it's one thing is you think you deal with somebody, but it's actually somebody else. And if you do not have the means or the tools to establish that, then there's a shortcoming in your, doesn't matter, the best solution, because you're not dealing with the right person.
Yeah, so if you've been tricked into who you're dealing with.
That's, that can basically still then penetrate your system. So when I came to New Zealand, I had this in mind. I just completed the exit for my last fintech business and personal loans, niche market lending. And that product was then used to scale into Africa, pretty much used in its final version and rolled out to different countries. But it obviously I had this idea in mind that digital identities is the next thing that needs to be solved.
Yep.
It's a bigger problem than one can imagine because it goes across, different countries and, a lot of privacy concerns. And it's a simple problem, but a difficult one with privacy. And also there's a lot of engagement and sharing of data that doesn't make it really easy. So we started off with that, engaged one of the corporates in New Zealand, started off with a pilot, successfully ventured into the next phase of the pilot, and then some way we got talking about trade. And there was a day that, it was just pitching all of the problems. It's a specific bank in New Zealand. All the different trade problems came to light. And they asked us, would we like to be getting involved in this project? And we started getting involved in the project, and I just saw the massive inefficiencies in trade. Really, what we found there was a total paper-based driven economy system.
So when you talk about trade, what are you covering here?
So what we do is we digitize trade. So we're removing paper from trade. And that's in its simplest form.
And this is sort of import, export?
That's for the importers and export and third parties like the freight forwarders, custom brokers, the agents, shipping companies. So everybody in the ecosystem, really, from moving a container from one country to another country, and then dealing with all the compliance related to every trade. So, a container can be a simple box, or it can be a container full of goods, or it can be a ship. And each of those is a transaction linked to certain compliance and requirements, and one side customs clearance and the other side customs declaration for import entry. So there's a lot of compliance, and each country has got different requirements. So what is happening is there's a lot of paper involved. So what we do is we try to digitize that entire process, deal with all the related parties that's involved, and trying to bring them into an ecosystem. Because what is happening today is you've got all these different solutions and intermediaries, but none of them are connected. None of them share data. It's basically moving paper with couriers and aeroplanes, as we just spoke about, moving them around the world. As one of the clients in the early pilot, when we really wanted to understand what is the level of digitization, we found that there is not really. It's just been an industry that's been forever been paper-driven. And that specific company was producing enough paper per year to fill a tennis court knee deep.
Wow.
Just one company, one of our exporters.
Wow.
That's the amount of
This
paper
is a New
that
Zealand exporter.
one mid-sized New Zealand export company, and the amount of paper that they need to produce. So you can imagine that's paper to the shipping company, paper to the banking, and it's all in duplicate and triplet. So
Wow.
it moves
Imagine
around
the
the world.
inefficiency that goes along with that.
And each participant add to that. And then it becomes a bigger pack. And it's all different requirements. Each different country has got different requirements as well.
They probably exported more paper than products.
Wow. So really a great opportunity. And so where were you at that stage in the business? And you'd been focusing on digital identity. So that was a pivot then to focus on trade. What was the size and scale of the business at that point? Where were you at in your journey?
So obviously understanding the importance of digital identity and what importance that will play in the longer term, that was a great basis to start off in terms of digitizing trade. For the moment, we just parked that there and said, okay, well, this industry still needs to evolve, but we've got a lot of IP created, and we can embed that into our future products, a lot of learnings, because there's identity in the product, and there's, as I mentioned just before, identity and people, the users, all different users that interact. And what is missing in trade is trust. So if you can establish trust between the product and the users, then you deliver a higher level of trust, and governments and all intermediaries and all different participants will then be more comfortable trading, and there will be more trade. So establishing that is really establishing it through technology. So after we've done our minimum viable product, pretty much a pilot between New Zealand and Korea with one of our exporters, we been very successful in that pilot, and we could show the inefficiencies in the process and how we can potentially solve those inefficiencies by connecting the entire ecosystem of all different participants and sharing data and removing paper. From that moment on, we really thought that this product and industry has got opportunity to be disrupted, and connecting all of these different silos that is currently in existence and to some extent still is. And basically, there's different pathways to establish that, and we found a pathway. And we also, soon after our minimum viable product, we saw opportunity in a few businesses that solves different pain points. In that early stages, we then acquired some of those businesses. Up to today, we've acquired 6 businesses and solving different problems, busy amalgamating all of that information and the flow of data into a system we call Cube, which brings it all together. Then in 2021, we listed TradeWindow on the NZX. And the reason for listing the company that early was really because we're a small company at the bottom of the earth, and what we're trying to deal with is big, large enterprise clients and governments. And to establish that trust, you need to really trade at a much higher level and have a much higher level of discipline and governance. And when you list it, it brings your whole level of discipline as a business to a much higher level.
Yeah, because you're forced to report on a whole bunch of things. You've got a whole lot of layers, and I guess there's that confidence of dealing with a tech startup that a government or an entity might not be sure whether you're going to be around tomorrow versus listed companies which would tend to have a longer lifespan. Put it that
totally
way.
a higher level of corporate governance. We obviously, in the early stages, we had attracted a bank investment, and attracting a bank investment meant already that we had to trade at a much higher level, and we had to put in a lot of corporate governance in order to fulfill the requirement. So just right from the beginning, we put in all of those measures, and we also got ISO certification and ISO 27000 and 9001, all the different things that would mean that companies and enterprises and governments would trust us more. And then after the listing, I would say, found it quite interesting that the market then suddenly changed. It pretty much listed into a down market. It still is. We then straight after stepped into COVID, another challenging time, but also great for digitization, because what COVID did is really exposed all the inefficiencies in trade. So what happened there is, goods were stuck on ports, stuck in countries, couldn't move. And the reason it couldn't move is with the paper. Aircraft stopped flying, and the paper was stuck in one country and the goods were stuck in a different country. And these two are needed to move goods. And that really illustrated the inefficiencies in trade. And I think from there on forward, that realization came that trade cannot happen without digitizing the whole industry. And it's not just about different segments of the industry that can be digitized. The entire industry had to be digitized because you have to exchange data. So the entire ecosystem from A to Z needed to be digitized. So that awareness has been clearly demonstrated through COVID. And post-COVID, it's a lot of digitization happening and adoption to digital trade, which has really been beneficial to TradeWindow. And it's continuously helping us accelerate.
And walk us through listing on the NZX. What did that look like in terms of the funding that you had received prior to listing, and then that entry into NZX? How did that play out?
If I go back to the early stages of TradeWindow, we've always been well funded. Been lucky to have great long-term investors, sizable professional investors. And I think a lot of our investors come from the industry and understand the pain points that we're trying to deal with. And there's a lot of pain points, and it's expensive to change the industry. And TradeWindow can't do it on its own, but lucky for us, there's a few other great initiatives and government initiatives across the world that is trying to digitize trade. It's not just about digitizing, it's about legal harmonization. It's about standardization. It's about, data standards and exchanging that, and being all the different siloed participants be ready to accept data exchanges, and also, in a secure way to be ready to engage. So our investors obviously knew, and we're experiencing all of this inefficiencies. TradeWindow then started building solutions. Some of the solutions we've built in-house, others we acquired. There was a lot of IP and problems already being solved in a siloed way, and no need for us to reinvent the wheel. So we just consolidated some of those applications into what we call Cube, and we'll continuously expand on that innovation. Then soon after we listed, I think the capital market started changing, as we all by now know. It's also was time that we, soon after COVID came, which I said COVID was great for us because it really exposed the inefficiencies. But then a down market cycle, high inflations, it was like the Ukraine war, and what we've got now, another war front opening. Yeah, it's been an interesting time to list. We did a direct listing. So with a direct listing, it's not like an IPO where you basically sell stock on the day. A direct listing is just a compliance listing. It's getting all of your processes and your fundraising ahead of the listing. We just successfully done a listing or a capital raise around a week before our listing or compliance listing. And then effectively just the difference is you comply to all the regulations and requirements of NZX, and then your stock start trading. On the listing day, we had a successful couple of months. Like I said, it was really a great market to list in at the time.
Because you ended up with a market cap, in the direction of 300 million?
It just started. Yeah, I think people saw the problem we're solving, and it got a lot of attraction and it got a lot of interest. And obviously, another point is it's got pros and cons when you've got limited liquidity. And like I said, none of our long-term shareholders are actually selling. They're all mostly, long-term investors. So there's scarce liquidity, and that meant with a few shares, it can quickly increase your market cap, which we've seen.
And vice versa, of course.
And vice versa. So on the flip side, when the market changes and there's scarce liquidity and it's a down run, and a changing market and scarcity of capital, then it can also run down. But yeah, it's been an interesting time. I really enjoyed the experience. It was great to work through all of the compliance, built a really solid team.
Do you enjoy doing compliance? That must be unusual. Do you enjoy compliance stuff, Mitchell?
I wouldn't say I enjoyed it.
I enjoy learning.
But I appointed the right people who do enjoy that. And they did a great job.
AJ enjoys delegating.
Yeah, absolutely.
No, I guess that's the thing, isn't it? Is finding those right people that can take care of all the different,
building great teams
of
around you. That's really the superpower of any company. Is if you've got the right people doing the right things, and they are aligned to the vision, and they energized, and they share your work ethic and your culture. Finding a group like that believing in something, and that's what I've got with TradeWindow. I've got an awesome group of people there that is, through all of the ups and downs, been really resilient and believe in the mission. And like I said, it makes it so much easier to pitch up for work when you've got, and we're surrounded by such a strong group of people. So yeah, right through the process, we had specialists in everything, helped us, great people in finance, great people in governance, as we say, great advisors. So that early stages of the listing was probably a little bit overvalued to the market, and unrealistic expectation of what the company value is, because it was early stage in commercialization and monetization of our products. So I don't think that value is at that stage. That was a little, there's scarcity and options in New Zealand's capital markets, in equity markets, and so it got a lot of attention, and it had a good run. but it wasn't the real value of the company. There's always a multiple that that your company based on your revenue. So that was a little bit disconnected.
Which isn't unusual in the startup world, is it?
Yeah.
I mean, it's like, you're looking at multiples, but you're also looking at what's the potential. Where will this organisation, be? How much can they scale to? Even for well-established firms that have been around for a long time, you can look at the multiples and scratch your head and wonder how they come about. But I guess that's what investors have to make those calls and judgments based on what they see and what the potential is.
But I also believe it was a time when most tech companies were maybe a little bit overvalued at the time, because you were finding multiples that was just not in line with the revenue.
Yeah.
And there was a flood of capital in the market looking for a home, and a little bit of FOMO in the market, and it was really easy to raise capital in those markets, and I think that that drove up the prices. And like I said, I think there should still be a connection to the company's underlying performance and a multiple linked to its revenue, and different multiples for different reasons. I totally agree with that. But there must be some sort of connection.
And Mitchell, tell us about your involvement with TradeWindow. When did you first get involved?
I've known AJ for some time, and we first met when I was leading the Digital Council for Aotearoa, and we were doing some work looking at e-commerce.
Right, this is for the government.
For the government advisory body. Yep. And we did some research into e-commerce, because e-commerce was going to be the key thing to unlock New Zealand businesses and economy, especially under COVID, right? So we kind of embarked on that, and then we started to realize that actually underneath e-commerce, it doesn't matter how good your kind of e-commerce online booking platform and all those things are. In order to complete a successful e-commerce transaction, a good has to be delivered to a person at a place, right? So then that whole e-commerce layer relies on a lower layer, which is supply chain logistics, right? And for a country like New Zealand, both importing and exporting, right, that supply chain has got to be integral to the flow of international trade in and out.
Yep.
And so that was when AJ and I started a working group, bringing on one hand government entities and on the other hand private sector companies together to start looking at how New Zealand could actually tackle this digitalization of trade, both as the lack of it is a challenge, but actually that thing in itself is an opportunity to really unlock the New Zealand economy. And AJ demonstrated amazing leadership. New Zealand didn't have that kind of a group before, and he stepped up and he brought others together, and so I was part of leading that conversation from the Digital Council side of things, and then kind of I learned more about TradeWindow and realized, wow, this company is actually pushing the frontier here, at least in New Zealand. This is the one that's at the forefront. By the time I'd met AJ, I don't know what trade volume you were doing, AJ, but you were only like 65% of all New Zealand export going out, into the world. I was gobsmacked. I'm thinking, wow, how come I've never heard of this company, TradeWindow, and it's already, handling more than half of New Zealand export. Yeah. And we're an export nation, And so that was how I was first aware of TradeWindow. And then over time, part of that working group, but also part of learning more about what are some of the challenges in trying to digitize the flow of trade, right? To enable all of everything else to actually happen. And then AJ started to share more about the challenges of building a business that does that, and then listing it. But then actually, there's more challenges after you've listed, right? It's like when you play a game, you go to the next level, you think, yeah, it's great, and then it gets harder. Right? Based on your previous success. So the biggest challenge then was, AJ was saying to me, look, we're doing really well, we've listed, we're growing and everything else, but at the same time, all of the things that come with being listed to be able to be trusted and all of those really good things actually also have an impact on how the business operate, and AJ felt that, TradeWindow wasn't as agile as it used to be. Things were there were just more layers and more tiers and more kind of I guess steps and delays and things like that, and more reason for why we're not really rolling out new products and developments and things as quickly as we used to, kind of thing.
Which I guess is pretty common, isn't it? As an organisation scales, you kind of you can almost build a straitjacket around the business and things that all seem necessary. So
yes, now look, all those things were necessary. Yeah. However, when you looked at TradeWindow is not a large corporate. Yeah. Right? They're not a startup, a small startup anymore. However, they're not a large corporate.
Now about 43.
Yeah.
And so for a not large corporate, having to carry all that structure, and having to start to operate like a large corporate actually slows you down, And so AJ kind of invited me to come along initially as an advisor to look at, can we unlock things and how can we unlock those things to enable the business to become agile again, both the scaling up and scaling down and adapting and seizing opportunities and so forth. And I think that was how we began the working relationship. And it's been really interesting to see, it's quite a unique situation where you're kind of in the middle, in the middle size. You're not like a big corporate, you don't have all of that resources, right? But then you're not a little player and you can't just shoot from the hip, and so there's a bunch of disciplines that you have to have as a business.
Finding that balance.
It's finding that balance, right?
Yeah. And walk us through, because often the best learnings are through the tough times. AJ, there's the scaling up, but scaling down was mentioned too. And you had a partnership, was a UK based firm, and that ended up sort of failing. And it meant you had to let a bunch of people go. So walk us through a little bit of that, because these things can be incredibly stressful, obviously, on individuals that have had to exit the business, but there's probably that sort of thing can cause a lot of damage to a business if it's not not handled
correctly.
Well.
Correctly,
how did you walk through that time and not get disillusioned?
Yeah, look, it's always difficult, but business is not easy, and as you mentioned, deals fall over. If you're in business and not gonna expect deals to fall over, then it's the wrong place for you to be. And like I said, we can manage everything from our side as best as we can to the best of our ability. But you're dealing with two sides of a deal. And what happened with the UK company is we always looking for better ways and more efficient ways to add more resources to TradeWindow's firepower, to scale up and to do and to build more product and build it in smarter ways. And what we found through partnerships, that's a really efficient manner to scale up the business, also to develop it in a way where we can capitalize the cost to our balance sheet, and then also finding a partner who's got all the resources and the know-how and the international network connections, and also IP. So a part of the deal is some IP that we could find, unique IP that would give us unfair advantage. So from early days, it's a deal that took about 7 months. So it was a lot to work through.
Quite a bit of headspace for you then.
A lot of headspace, back and forth, quite a complex contract. It took us a long time to get to the final version. By that time, we were really sure about the deal. So by that time, it's a point of almost no return. We already integrated quite a bit. And then what happened on their side is they had some internal turmoil. The CEO on the day they had to settle us was fired for internal activity. Anyway, there was some internal turmoil. It was really bad timing for us. So,
how did you feel finding this out on the day that you're supposed to settle?
I can
that
tell
things
you
are
it's
kind
not
of collapsing in front of you.
I actually only received a text and an email later and saying, "Hey, we've got a few issues yet to deal with. We've just lost our CEO. 20 people has exited the business, trying to get hold of the company and say, hey, what's going on? I really think this is not a great time to like have your turmoil while you have to settle us.
Millions of dollars at stake, no doubt.
After 7 months of working and going back and forth, and I'm not entirely sure, but I doesn't think that this is going to be, a great experience for us on this side of the deal that need to now go back and explain to the market that, hey, there's a deal that fell over and this is how it's going to impact us. And also, the last quarter of the year, it's never a good time to raise capital and reset and find alternatives. We're always working and dealing with other funding opportunities and other development partners. But this one came quite late and to a big surprise. We never expected that on the day of settlement, when they confirm, everything is good, it's all good to go. And then you receive a text and say it's not going to happen anymore. But, getting back into it, we then decided maybe it's a blessing in disguise. There's always alternatives. And there's, as a resilient company and as leadership, you should always plan for the inevitable. And you should always expect that a deal is not done until the money is in the bank. Straight after then, we realized that it's a bad time of the year and we have to reorganize. And what we rather would like to call it right-sizing the business. So right-sizing it for where it is now and what its capital can carry. And TradeWindow was always fortunate to have a big R&D team. We're developing and innovating quite a lot of product. And I was always telling the market and saying to the market is 58% at that stage of all of our cost is invested in R&D. If you look at the business fundamentally, it's got profit margins, growth profit margins north of 60%. And all of the different products that we acquired in our key products are all, and on a standalone basis, they're all profitable.
That's a great position to be in.
Yeah, exactly. So I always knew that as our position. So what we needed to do is we had to take the foot off the pedal on R&D. And we were luckily, quite mature as a business to already be at that point where we could scale back our R&D, remove 50% of the cost base. And within the next 3 months, as we, from today, TradeWindow will be a sustainable and a EBITDA break-even business. Unfortunately, any reorganization and any right-sizing takes time. So we started straight after that announcement came out. We just completed our reorganization and our right-sizing. And now in the next quarter, TradeWindow will be EBITDA break-even. It's unfortunate that it happened. We were looking forward to accelerating the R&D, accelerating our innovation, and having all of those extra firepower and resources on the team. But nonetheless, TradeWindow team is a resilient team. Fundamentally, we're a strong company. We've got great people. We had to, unfortunately, greet some of our amazing staff and developers and people who's got a lot of knowledge. But the core team is a strong team and is a resilient team, and we will rebuild that. It's just we can't do it right now. With the current market conditions is capital constraint, and it's not just us. All companies are finding it quite difficult to raise capital. Capital is firstly, it's quite expensive at the moment. You've got very low valuations, multiples that company trade on. And, if you find investment, and it's quite difficult to find it at the moment, it is at a very low valuation. But there's alternatives to those. There's finding new capital or finding debt or just reorganizing yourself and make best of what you've got. And that's exactly what TradeWindow has done.
Yeah, and I think, this impacts everyone, doesn't it? We'd probably look across listeners and, there would be, folks who have been maybe wondering around, looking for new roles, looking for, salary increases, all these sorts of things, wherever they sit, those that are leading and running businesses, and everybody's impacted. There's, people that have been laid off, there's a lack of new opportunities for folks, and when there's that sort of capital crunch, we all get impacted in one way or another, and you kind of have to batten down the hatches and do the best that you can. But when we come out of these things as a country, we can often then do a lot better if we've been smart around how we've handled things through the through the tougher times. So, yeah, really encouraging how you've come through it. And look, I really appreciate you sharing openly about this on the New Zealand Tech podcast, because, often what we get is firms that are willing to talk and sort of wave the flag for their company when things are all roses and the economy's doing well and they're doing well. But these ups and downs that we need to learn and share the stories of how we weather them and how we make good decisions going through these things, so that we have good, stable firms in the long term.
You need to grow your resilience, and you learn from the bad days, and you learn from deals that fall over and failures, and that's really how you grow resilience and how you grow a team that can take you forward. Because you don't learn when everything is going well and it's all easy. Because you should be really worried when a company has not faced any downturn or turbulent times. And you also need to then question, how would the team function under those difficult times? Will they still stay together? Will they still deliver? Or will they fall apart and fall over? And TradeWindow's demonstrated now that we can be trusted to also deal with the difficult times. We've had the great times. With capital, it's easy, and we built a lot of product, and it's all good. But how we deal with the difficult times really builds character. And we've survived that. And there will be other ones. There will be different type of challenges ahead. And that should build confidence and trust in the team. And that's why I say my team is amazing. Those people there, they are not motivated by anything else other than success. And going through the difficult times as a team brings us together. We would have loved to have all of our team today, but this is what we have to do for the current market, and we will scale up again. It's just a temporary thing to right size, but it's the right discipline, the right thing to do under current market conditions.
Now, looking at that change, because what was your peak in terms of people there prior to the layoffs?
Yeah, when capital was available and we could build a lot of product. And like I said, we've pre-built product knowing that we will monetize some of them later. We were, I think, at max 104 people between New Zealand, Australia, and then we've also set up development resources in Philippines. That has been really great for us, finding a lot of great talent there that supports the team. So we've grown the team to quite a sizable group of developers, and an R&D team, like I said, was probably 2/3 of the staff component. So it was a easy decision for us to take the foot off the pedal on R&D. We've got a lot of products still to monetize, and as the last quarter results just came out, on a month to month, December to December, we've grown 49%, and our Q product has grown 150% in revenue, and that's from a year 5 base. So we achieving really good metrics at the moment, and I just believe that there's still more, and we can still even go faster. There's a lot of opportunity still for TradeWindow.
Yeah, and now with that sort of smaller team, how have you been leaning into the likes of artificial intelligence and so on because that's the thing at the moment. We've got access to many more tools than what were available 2, 3, 4 years ago. How these sort of technologies have helped you to not completely let go, even though you've ended up with a smaller team?
I don't think we have a choice. These emergent technologies are now part of our core roadmap going forward, where we're looking to apply smart technologies like AI, but there are other technologies, is when we look at not just building great technology products that we offer to customers, but looking at the business, the TradeWindow business itself.
Yep.
I mean, if we succeed and we have more customers, we can't just hire more people, right? So we're really now looking at some of the key areas where it really matters for us to both empower our people more as well as our customers more, but also give us more efficiency and scalability. And that's where we've identified that it's going to be in the education area. We can provide contents to educate the market, educate our customers through our academy business model at the moment. That is a prime target for AI. And then there's self-onboarding for customers, ongoing self-support, and then all of the back end of our business around tracking, monitoring, billing, payments, all of those things. Again, automation is ultimately the key. So we've done quite a bit over time, but we've prioritized a lot on the products we build for customers.
Yeah.
I think going forward, we have to bring that balance up to actually 50-50, where it's just as important, for the mechanic to have a good car than to just work on other people's car, right?
Yeah.
So we're now really going to have to rebalance that and actually lift the game on applying technology to our own business.
Yeah, great.
A lot more than we have done.
Yeah, and the academy. Tell us a little bit about where does that fit in and what does that consist of?
About 2 years ago, we ran into a bottleneck with our onboarding, and we were fully staffed, and it was just a slow process, and we were looking at ways how can we speed up the onboarding process. And I spoke to the team and said it's all about where the big bottleneck is about training. It's about training our people on the system and also on the industry and industry knowledge. So why don't we just go and build the academy, and then a lot of the training needs that actually keep our staff busy and actually be commercializing product, they're now busy training people. And we said, let's take that function away. Let's create a academy. And we created a learning management system, developed all the material on every product and also industry knowledge, and we've built out to different levels of training, and you can get a certification through our training academy. And that's now really accelerating to a point where our onboarding process is actually now our superpower. And whenever you need more information, or ever when you want to accelerate or you want to enhance your knowledge, then you go back into the academy, either on the products or general knowledge, and you can just continue building your skill set. But it's also a great way to localize our product into other markets, because every market is different, and that's a way that we can then really build collateral of information, and people can come in their own convenience and they can train as much as they want. But we've also found it easy to onboard staff. So if you just think about the value of an academy, is it's not just for your clients, but it's for your own internal use. As when we deal with partners and we want to train them, because trade is quite complicated. There's a lot of requirements, there's a lot of detail there. There's a high barrier to entry. High barrier to entry in trade because it's so complex. And like I said, compliance is the game in trade, and it's not going to get less, it's going to get more. So the way to deal with it is train your ecosystem through an academy. Where we're going now with the academy as a next phase of evolution is through AI. You can now train models, and you can then have a chatbot that actually asks interactive questions right out of your academy and your product knowledge base. So without knowing the topic or the industry, you can then inject certain questions, and AI can actually educate you from an informed resource specifically to your product or specific requirements. And I think that evolution is going to continue, where it's just as needed as you require, having that knowledge available. Really interactive. That's probably what I wanted to mention, is having a training academy that's interactive.
That's great. I think we're just looking at the time. We're probably out of time, so I know there's a lot more we could delve into. So we may have to look at an update or another session on another occasion. But it's been really great, fascinating to have both of you here. So thank you, AJ. Thank you, Mitchell.
Thank you, Will.
Anything else that we've missed that we should just cover off before we finish up?
I would just offer a last comment. Right? I take a step back from the details of these conversations, and I try to kind of boil them back up to kind of what's the big deal here. I think going forward, if we wanted to trust the flow of money, we'll look to banks, for that with the data and the systems and all of that sort of thing. But if we look at how we might trust the flow of goods, then it is the kind of things that we do today going forward that will actually provide the world with the ability to trust the flow of goods. And I think that's what really excites me and AJ when we look forward in terms of what could be, and the kind of future that we could create, with a vehicle such as TradeWindow.
Oh, really excited to follow your progress and
Thank you, Bill.
and your journey through the inevitable ups and downs, that these things have, and really appreciate the transparency today, and just fascinating to delve into the story. So thank you both, and thanks everyone for listening in to this episode of the New Zealand Tech Podcast, and of course thank you to our show partners. To Gorilla Technology, HP, Spark, 2 Degrees, and 1NZ. If you've been watching the live stream, then do make sure you find your audio app, whether that's Apple Podcasts, Spotify, etc. Follow the NZ Tech Podcast there, and of course, if you've been listening to the audio, then make sure you seek out the videos so you get that chance to capture some of the live streams and the in-person chats there. I can follow myself, Paul Spain, on LinkedIn for those, and you can look up NZ Tech Podcast on YouTube, Facebook, and X also for those live streams. So thanks everyone, and we'll catch you again on the next episode. Thanks guys.
Thank you.
Cheers.
The New Zealand Tech Podcast, brought to you by Gorilla Technology, proactive and strategic IT.